Good morning, everyone. Hope you can hear me okay. So, what's today about? Well, market's trying to break up, but I'm telling you right now, the internals stink. So, a lot of times I look at that. So, if you're a day trading fool like me, I'm watching this. This doesn't mean you have to go wildly bullish or bearish or whatever. But if you're day trading, you're watching this. You got to know what to key off of. So yesterday, like I correctly called for everybody in the central room, um, and the chart patterns mastery room is yesterday. The firmness in the financials led to the overall markets bouncing strong. Today, it's the opposite. So I'll show you what we're talking about. So number one, XLF, the index, and you'll see it's going down. I mean, not a lot, but it's just not making a new high. Number two on the right is the advanced decline. This has been on the decline, no pun intended, all day. So when this went to a new high on the left, this was already down here. So the internal stunk. So there are three reasons of why this trend line on the left worked. So now that's not a lot. That's only 5 points. Don't get me wrong. I'm not saying, oh, crash or any of this stuff. I'm just saying that there were three reasons. Number one, the financials wouldn't go up. Number two, the advanced decline wouldn't go up. And number three, the thing that led on the opening went straight down, which is the Russell. So if you're shorting the indexes and you're like buying some small stocks, it just might not work in here. I just want to make that clear. If you're frustrated with it, well, I understand why, because not that many things went up. So as you see what's going on, so it's still happening. The Russell going down makes it more likely that this trend line was going to work. That's all it means. Doesn't mean that it's got to be some crash, like nefarious crash and all that. But I just wanted to show you that. So, three reasons: financials like JP Morgan not rallying much. I mean, really, in the grand scheme of things, it's down, even though the ES is up 30. Number two is the advanced decline. Number three, the Russell. That's why we have these things up. This is a good tell for you. I'm just telling you, it's worked pretty well. So as you see in here, what you're watching is that the advanced decline and the Russell are the internals are weak. So what's been working for days is if the financials won't go up, then the markets aren't going to go like up 60. That's all it needs. It means on a short-term day trading basis, that's going to work. Now it's at support. So just keep that in mind. Now it's at support. That doesn't mean you have to touch it. So what else led the market up on the opening? Microsoft and Nvidia. So, and Amazon and Meta. And by the way, everybody talks about Meta and that it's been up like 18 straight days. Just keep in mind something. I don't care how many days it's up in a row. I care on how far it is away from its 20 moving average in relation to other tech stocks. That's it. Because I'm telling you, it's sort of like betting on heads and saying it can't keep being heads and you can bust out trying to bet on that. If you bet on Meta right here, saying it's been up 10 straight days, well, it's been up 18 now. Go back here. Look how many days it was up. Look how many days it was up. That's not what I care about. What I care about is how far from the 20 moving average. Almost every time it had these massive moves, it went back to at least revert to the 20. Look at this. Back to the 20. You can go back a long way. Let me go back even farther and show you. So all these times it's had big old rallies, days up in a row, came back to the 20, came back to the 20, close to the 20, all the way to the 20. And what do you see now in the grand scheme of things? It's way over the 20. So what happened? Chart patterns master. I went and shorted tiny again at 725, by the way. Tiny. But the key is percentage wise, it's going to go back to touch that. Or it doesn't have to touch that. Waffle It can waffle around while the 20 catches up. That's all it means. So anybody joker on internet that's talking about, oh, it's been up so much, it's got to go down. No, it usually means it futzes around so the 20 catches up. That's all it means. So, I mean, that's all it means. So, like here, it was up a lot in a row. And then it just futzed around so the 20 could catch up. So just keep that in mind on how we look at these things. And by the way, here we go again of somebody having to get banned on the YouTube room because they're screwing around blocking uh talking about their sites. So let me go block them. Unbelievable. So unbelievable. So if you're in here, Mirza, I'd love you to just go and get rid of them. So in there. But getting back to it in this room, like I said, this does not mean you're going to crash or whatever. I was just showing from day trading point of view how I'm looking at it. Just day trading point of view. So just keep that in mind in there. And like I said, if I'm right, you're going to see the Russell eventually kick in. You just don't have it yet. So the bonds have made back everything from yesterday. ES has made it back. And I thought I'd go over why it's made it back. So let me show you what we're talking about. What we're talking about in here is this. Number one, everybody fretting about the CPI yesterday and the PPI today. Keep in mind that Powell has been testifying or whatever it's called, commenting or presenting to the public. And basically, he said he's not worried about inflation, that it's under control. I think he's partaking in some of these psychedelic drug experiments to say that, but that's what he said. So that means to me the CPI and the PPI aren't going to matter. And that's exactly what happened. In fact, when he came out yesterday and wasn't worried, well, guess what? They already said they weren't going to cut. So big deal. If they had said they were going to cut and the CPI was bad, yeah, then it would have been a big deal. So just keep that in mind. Like I warned 2 days ago, for all the people that were buying on the way down in some stupid thing like UAL, a red candle is a red candle. So when you see a red candle, that means to sell rallies, not buy them. Just keep that in mind in there. There are too many people that buy on the way down. And I'll tell you, there's a time and a place to play that. So if NVIDIA has a strong uptrend, you can buy on the first turn. But I have no idea why everybody buys these when you get a big red candle. Keep in mind, NVIDIA, big red candle, hasn't been the same. I mean, it looks great now, but I'm saying big red candle, big red candle. And I'll tell you right now, I know everybody's getting bailed out buying on the way down. But I'll tell you right now, if you have a margin account, that's what margin calls are all about. Buying on the way down, eventually it goes up. But I'm telling you, you're missing other opportunities if you fall in love with the stock. So this is all about red candles. So when you see a red candle, that's usually the end. So, and don't get me wrong, I make mistakes on this, but the key is that if you want to play a strongly trending stock like this, you got to wait for the at least 2 days up from like now up 2 day higher than 2 days prior. That's been working over and over and over. Or here, 2 periods higher, even on a 1 minute. Look at that. You buy there. So I'm just annoyed. I keep missing things like this because I'm watching so many things. But there you go. 2 periods higher. And it worked. It worked. So keep that in mind. So definitely keep that in mind. Like I said, I'm not bearish on the indexes. I was bearish on the bonds. I was saying that if you see a turn, then I'll get bearish, but I'm not bearish on the indexes whatsoever till they tell me I should be bearish. I don't see anything that looks bearish yet. The key is to be bearish when it breaks and then it works off its oversold poorly, like into a bear flag. I'm not bearish at all right now. I'm not bearish until I see a turn. If I saw this, I get bearish. If I saw this, I get bearish, which means I'm going to miss the first move. Two candles lower than, candle lower than two prior candles. I'm telling you, selling on the way down or buying on the way up will keep you in this business, because I've just seen it over and over. It sounds real easy to buy Tesla at 250, 350 and 340 and 330. But that means you can't buy Lilly on the way up because you're already stuck in something else on the way down. So it's using your money effectively. So that's how I look at it. So I'm just not bearish or bullish. I'm just looking for individual ideas. And no idea in here. So except to just trade what I see. And at the moment, what I see is that this is trying to break up. Except, you see it. It's trying to break up. So I don't see a bearish pattern in here except some negative divergences. So if this Russell doesn't rally, and if the transports don't rally much, you'll see they're not even up. I just messed it up. Let me put it in here. So are there some negative divergences? Of course there are. Of course there are negative divergences. Dow Jones transports under their moving averages. The Russell under its moving averages. Definitely negative divergences. And keep in mind another thing that, I've been trading for 45 years. I was on the floor when they started the S&P pit. Just keep in mind that administrations want markets to go up. So just keep that in mind. What's that mean? Well, I'll show you two things that have happened since 1982. Number one, every big sell-off gets bought. 1987, 1989, any panic, because it doesn't take a lot of futures to turn the markets around. So what happens is you get, administrations buying the futures like the plunge protection team. But what happens is it's a narrow rally like today. But it doesn't take much. There were two things. One was the S&P futures starting, so it doesn't take a lot to stabilize it. Number two is buybacks became legal in 1982. Yeah, isn't that ironic? There you go. 1982. Market overall has been straight up since then. Buybacks in the S&P. It's just amazing. So I'm not bullish. I'm not bearish in here, except that you're trying to break up and you have negative divergences. And that's about it. So the transports are under the moving averages. The Russell is, but it doesn't mean a darn thing at the moment. So just so you know, I do not care about moving averages as like support or resistance. I care about them in relation to other indexes. So when I see the S&P over these two moving averages, the 20 and the 50, keep in mind 20 and 50 is what most hedge funds use. I'm watching the Russell under both. I'm watching the transports under both. But there's no trigger to the downside at the moment. No trigger. Are there warning signs? Yeah, here's another warning sign. I did this in the Essentials room on Monday about the VIX and its Bollinger Band. And the VIX is getting near the lower Bollinger Band. But like I said, there's no magic bullet. There isn't a holy grail. What I mean by that is the Bollinger Bands indeed are pinching. That usually means a big move. But they're not. You got to combine it with other things. So I just don't see the trade at the moment. So it's not an extreme. Now, I'll tell you where I would get nervous. If I see the Russell absolutely get destroyed under the moving averages, like down here, like at those twerks right here on that February 20, right here on that Sunday night. If I see it here and I see the transports here, they're not there yet. Then that's such a disparity. I'll find a lot more short ideas. But at the moment, we're just futzing around here. And all I see right now, is divergences, but no cross. That's all I see. Divergences and no cross. I mean, that's it. I'd love to find 8 million other ideas, but I don't see them. So, I mean, that's it. All it means to me is you're trying to break up, but there are just so many divergences. It's hard for me to chase a rally when the ES is up 33. And like I said, go to the 20, go to the 50. It's under both moving averages. Go to the 20, go to the 50, under the moving averages. 20 and 50, over the moving averages. 20 and 50, over the moving averages. So you have divergence, but you don't have any semblance of a swing short. There's nothing in here yet. Now, on the other hand, if you want to play a 5-minute chart, just look at Meta. It's trying to finally break an uptrend line. So, I mean, just keep that in mind today. If the NASDAQ settles down, yeah, you could see this under 720. So keep that in mind. Yeah, Tom H., a lot of times we call that the Sadaka market. So the breaking up is hard to do. But if you're frustrated because it seems like a narrow rally, while the advanced decline going down and the small caps going down, yeah, it's frustrating. So that's where we are right now. I mean, I can't tell you how many small stocks just don't want to go up. So it definitely seems like they're buying the futures and they're using the futures. So when a futures trader, what they'll do is they'll buy the highest concentration stocks. So if the futures go up, they're going to buy the Apples, they're going to buy the Metas, they're going to buy the Nvidias. And that's what they're doing. So just keep that in mind in there. That's what I'm watching, is that it's narrow, which means it's hard to trade. I will tell you that when the ES is going up, but you watch the JP Morgan's going down, it could be a tell later. Like now, if you're going to trade ultra short term, then you see the SPX is trying to form a bear flag. If that breaks, unfortunately, it's all of 4 points. Here we go again, that I've talked about over and over. You don't buy premium if you only have one reason. The professionals sell premium. Does that mean I want to sell premium here? Well, you got all these Trump tariff stuff coming out. I don't want to sell premium. I see about that. I see that if that breaks, it could go to here. So that's 10 points. Yeah, I mean, the problem is it might take 2 hours. And in those 2 hours, if you buy out of the money puts in the SPX, you'll lose money because of the time premium decay. Theoretically, I think it goes to here, especially if the internals don't improve. So you see what's going on with JP Morgan. You see the advanced decline in the Russell not rallying. So that makes that bear flag more likely to work. That's all it means. Doesn't mean any kind of crash, just means it's more likely to work. And that's where I am right now. So the thing is, yeah, you got the Deers of the world going down. I did not buy the opening in Deer. If you're going to go and try to buy something on the opening that has bad earnings, like I said, take when a bar is 2 time frames higher than another bar. That way you're not buying on the way down. So, I mean, that's how we do it. Other people do it other ways. They buy all the way down and get bailed out. We don't do it that way because that's what margin calls are made out of. Because even if you end up right, the firms won't let you stay in. But you see, these stocks have amazing recuperative abilities. So I would have played Caterpillar instead. Not a big move, but it went down because of Deer. So when Deer started going up, you could latch on to Caterpillar. Not a lot. That's not a big move, but that kind of companion stock. Now, UAL, no idea, but I will show you. I can't share this scam, but I can show you some results. There are a number of stocks that have big red candles, which means not to chase rallies. On the other hand, the overall market might go up and break up, so you don't want to short a big red candle. Put you in a quandary. You're not sure what to do. But I'll just show you anyway this results. So here's a Brecher big red candles over the last 5 days. Over the last 5 days. Now, like I said, that doesn't mean they have to go down if the market breaks up. It didn't work. Let me find why. Well, it's not working. Probably because I'm dual broadcasting. But you could just go through a number of stocks and you'll find that the ones that, there you go. That's not right. It's not 486 stocks. But we'll put in main list, my main list. Let's see if that works better. There you go, 64 stocks. That just means they had red candles in the last 5 days. Now I'll just show you. So we'll put 64 over here. So App, they had earnings, Hubs had earnings, Tesla, big red candles. You're going to see that even though this is up 30, you have a tremendous amount of stocks that have had red candles in the last couple of days. And what's happened? Overall, they've acted poorly. They've underperformed. I'm telling you, red candles are a big deal. So now what do you have? Well, you got the NASDAQ with that little bear flag, like I talked about. So I'm just telling you, red candles are red candles. Usually after a big red candle, that means the momentum has changed. You see it. All of these. So it seems to work. So you see the little bear flags now. I hope you see it. So a lot ask me what a Brecher ledge is. So a Brecher ledge is just a bear flag with a horizontal little trend line. That after a move down. Now, why isn't this as reliable? Because it's already at support. A bear flag at support is not to be trusted. Bear flag at support. So just keep that in mind. A bear flag at support is not to be trusted. So you got to be picky on these things. That's all I'm telling you. You got to be picky. So it's working. Now, why would you be more likely to short the NASDAQ than the ES? I'll show you. And it doesn't mean it won't work, but I'm telling you, when you have a bear flag at support, the problem is you don't want to go and buy put premium because it's probably going to stick in this zone. This looks a lot more ominous. It is at support, but not that kind of support. I look at prior, forget about Fibonacci's and all that. On the way down, I look at price support. Way up, sure, you can use Fibonacci's. They work great. But on the way down, price is what matters. So just keep that in mind. And like I said, with any of these, whether it's Amazon, Google, big red candles, they're not going to be the same. When do you buy an Amazon? You buy an Amazon when it has a candle 2 time frames higher than the prior ones. Amazon isn't like that. It was here. That candle is higher than 2 prior. Not now. I don't see any reason to get an Amazon. Now, on the other hand, at this zone, I would look for a reversal pattern, but you don't have one yet. So maybe, oh, look at that. Yeah, right in front of you. Look at this. Is that amazing or what? There, bear flag is a bear flag. Like I said, this has much less support. So we were talking about on the ES, we were talking about 10 points. I'll show you. There, I just showed you. So we were talking about 10 points. 10 points. It's getting there. That's 60.94. But believe it or not, though, that little move is all of 4 points because it's near support. That's why NASDAQ was a better short than the S&P. So I just want to show you that. But bear flags do work. So that's pretty cool. So I hope you saw why. I mean, we just showed it real time. What are we talking about? Russell, advanced decline meant this was more likely to work. But then you want to find the one that has the least support. So keep that in mind. So I hope you saw that in there. So Jack, good. Short in the simulator. So this should get to 60.94. So let's go back to it. I just showed it. I'm so thrilled I showed it. NASDAQ at support, ES going down by the previous move. Right there. The Brecher ledge in action right in front of you. That's pretty cool. I don't know about you. I find that pretty cool. There. So I hope you saw that. Bear flag. Divergences with the Russell and the advanced decline meant that bear flag was more likely to work. That's all it means. Now it's in a support zone. Forget about the moving averages. You would have lost your butt if you're like, it's going to stop at the moving averages. It's stopping at prior price support. Look at that. And then it bounced. So price support. And then it bounced. So believe it or not, if you bought puts right here, you might not have made a dime because while I've been on, the time premium dies. So just keep that in mind. So that's what I'm seeing. So I'm just telling you. So let's just go over this because I'm watching a lot of people that stink at 0 DTE. So I want to show you how we do it right here. Could you have sold a call or bought a put spread? I'm not just blindly buying premium. Do you see the support? So I'll just show you. So right here, what time was that? 11:52. So let's say you want to play the 670 puts right here. So we're going to go and on the right, put the 670 puts. Yeah, they moved. because you have some time. It's not that far out of the money. Let's take the 660 puts. We're going to show you on the right. All right, 660 puts. What have they done when it broke? That was 1152. Where was 1152? Right here. So you made 20 cents. That's it. You made 20 cents. You can't buy premium when you have a breakdown at support. See that? You made all 20 cents. On the other hand, what happens if you would have sold the 6,100 calls? So let's go to it. There. You would have made 50%. Can you believe that? These went down, well, $1, 30%, while the puts you were long went up 8%. I'm telling you, when you see divergences and a bear flag, but it's at support, I would sell premium, not buy premium, because you're just not going to make it. Now, let me just tell you right here, if there was a bear flag right here, when there was no support underneath, that's a whole different animal. Then you can buy out of the money puts. You don't have that now. I'm just telling you theoretically. So just keep that in mind, that when you watch this, and you can watch it next hour, if the markets go only to here, you're going to see the 660 puts about unchanged, but you're going to see the 6,100 calls down to $1. So pretty cool on how that works. Well, I just told you how. So, but you post a lot of the ones you do, but the whole point is, if you see negative divergences and a bear flag, you sell call premium. If you see a bear flag with no support underneath, you could buy put premium. But overall, if we buy on the way down when it breaks, usually we'll buy it as a put spread, because look at it bounce. So if you look here, this has moved 20 cents. But I bet you if you put that put up there, you would have lost money. Let's go see. There. You made nothing. You made zero. So you were dead right on the break, but it was at support and you would have lost money. So if you can't sell a call, then you go and do what Mitch does on our site. You go and sell a 6,100, 6,130. Do something real wide. I know risk reward, it looks like it stinks. But the whole idea is then you're reducing your margin. If you have no margin, then you can't even trade these. But you see 61, 61.30, 61.20. So something like that. So you can sell. I mean, that way, I know it sounds weird. The worst you can lose is 20, but that's the way to do it. So, and like I said, the overall way is to sell premium. That's how you make money in the long run, selling premium. Now, if you want to go, and I'm telling you, the risk reward is selling premium when you see negative divergences. So if you see a bear flag with no support underneath, I'm probably going to buy a put debit spread. Well, no support underneath, I might just buy an out of the money put. If there's negative divergences, I have to have more than one reason. If I see the advanced decline falling apart and I see a bear flag, but it's at support, then I'm going to sell an out of the money calls credit spread. Not buying a put. In fact, we'll revisit it. On the left, the ES. You see it's back to where it was. What's happening? Believe it or not, it's exactly where the breakdown was, but the puts are down. So because of time premium. So the puts are down. On the other hand, where are the calls? The 6,100 calls are probably only 2.5. So you're still up to 20%. You're using time to your advantage. There they are. So the put, you lost money. The call, you made 20%. More of the story, buying premium, you better have the momentum correct and the timing. So it's just amazing on how that works. I find it fascinating. But like I said, the reason most people lose on zero DTE is they don't wait for the correct setup. Today, there were a bunch of setups, but in a different way. So did you see any bull flags? Not really. Not really. Maybe there. There. Little bull flag. Still not great because it futzed around for a long time. So you really didn't have the setups. Did you have a setup here? Yeah, sorta. But see that development? It took that long to form an actual bear flag. So the problem is that time, that hour, meant that your put was dying. I'll show you right there. Let's take 1125. 1125, the 6,100 call was 4. It sold off, or let's put it this way, it stopped going up. Here's another thing. You see that line I just drew? You went to a new high. Well, guess what? The calls were 10% lower. That's time decay. But back here, when it broke here, right there, when it broke at 1125, these went from $4 to 2.5 before the bear flag. So what happened to the puts at 1125? Guess what? The puts went from 3.5, and then it developed the bear flag, and they went to 3. You lost 20% because it took time for that bear flag to develop, the time decay. I find that amazing. So basically, that break, all this did was mean a loss of momentum. That's it. So it killed calls because there was a loss of momentum. So the time value decayed. But because it went down slowly, it meant that the puts were going down. So just keep that in mind. I mean, I hope that helps. Like you see, it stopped exactly where we said it would, at price support. So don't make it harder than it has to be. Stopped at price support. That was it. Whoa. And chart patterns mastery. Just to let you know, we're still in GTBIF. Don't forget that. So we're in that. But getting back to it in here. So I hope that helps with that. And like I said, I never play earnings. This earnings, if you played earnings, you were right 10% betting on it going up. 10%. Like I said, I traded for 96 months in the IBM pit on the CBOE. Made money 95 straight months. How many times did I bet on earnings? 0. How many times did I bet on earnings on other stocks? 0. So the odds are against you taking shot. It's just betting. So I don't play it. If other people do, well, more power to them if they make money on it. And like I don't like TLT even trading it. So just keep that in mind also. But I'll show you a perfect example in stock. Let me see if I can find a stock about why I hate trading earnings. Let me see if I can find it. Yeah, here's a good one for you. You talk about earnings. Look at Hood. Do you see the 65 calls are 40 cents? Stock's up 6. 65 calls are 40 cents. Where were they last night? The stock was $10 lower and they were 40 cents. I'm just telling you, taking shots on earnings is a bad idea. I mean, in my opinion, if you want to do it, fine. I don't go near earnings. I'll trade it afterwards, like you saw Deere go nuts. Sure, you could trade Deere afterwards. You could trade Lilly afterwards, after an event. But I have no idea in here. I mean, now, that being said, if we see unusual puts or call activity, that's different. Now, keep in mind when analysts upgrade or downgrade, I would go to tip ranks and put that analyst in there. So a lot of times they're in the bottom rung of the 9,500 analysts. But right now, if I saw unusual put activity, because just keep in mind the Robinhood effect. If it's up 15, it's going to have more calls than puts. So it doesn't tell me a darn thing. It's when a stock is relatively unchanged and trades a ton of puts prior to earnings, I might play something under the market. So, I mean, that's how we do it. Like I said, everybody has a different way to do it. Maybe they're good at it, but overall, trading earnings would have worked 10% of the time this quarter. So, like I said, we don't bet. I mean, I'll tell you right now, how many did you see on Twitter bought Google because Google looked like a breakout and they bought the earnings? How'd that work? How did Amazon work? So none of them worked, the big ones. Apple worked for a second and then it went straight down. So did everybody see my Twitter post of why I was bullish on Apple? Or let's put it this way, I wasn't bearish one bit. A bearish pattern at support when they have a big buyback, a bearish pattern is not to be trusted. So that was all over stock twits. So just to let you know. TLT, I don't like puts or calls. Like I said, TLT is a depleting commodity. What I mean by that is the way that it's factored just doesn't, TLT puts, no. I don't like TLT one way or the other to buy premium. It stinks. We tried calendars. It didn't work. I don't like TLT puts or calls here. And the reason is because a lot of political stuff doesn't want interest rates to go any higher. So I have no idea in TLT here. And here you go. You bet on TLT going down, you get yourself hosed. You bet on it going up, you get hosed. So I don't like it one way or the other. Whoa, ES going down. That's a surprise. Like I said, there's a time and a place to play it on the upside or downside. So let me show you something else. Go and look at the ES now. Where did it rally to? Yep, it rallied right to the breakdown. So, Jack, if you're playing that trading view challenge, you short here, you buy at the support, then you look for your reversal candle at resistance. So, you short here, you buy at the support, you just cover. I'm not saying you have to buy it. Then you look for the reversal candle, which is a red taking back half a green. So is that what you're doing? Yeah, you're looking at it. Thanks for showing that. Exactly. You're shorting the break. You're buying the support to cover your short. And then you're shorting when it tests that again. So, I mean, that's pretty cool. That's exactly what you did, right? Yeah. Same exact thing that Jack's nice enough to post. You're shorting the break. You're buying the support. And then you're shorting the back test. So pretty cool. Now, the problem is overall, the market's acting okay. The bonds are on the high. The Russell's rallying. There's no real reason to go crazy on the downside. You're having to play the bounce trade, so to speak. I mean, that's how it looks to me, the bounce trade. And by the way, Chart Patterns Master, I didn't have time to put that on in the Chart Patterns Mastery, but a trend line on a stock that's been parabolic is more likely to work. I showed that trend line in the room. Where did it stop? Right at support. Where's it going now? Probably back to resistance. Then you reshort it. I wish we had that one in TradingView. That's pretty cool. So more people posting. There. So that's what I'm doing. So it means right now, if the Russell is finally going back up and the advanced decline's going back up, so Jack, at the minimum, you don't want to reshort, because if the reasons that had you want to go short aren't there anymore, you were playing that this was more likely to break if the advanced decline, the Russell, were going down. Well, they're both going up while this went down. So that theory is out the window. So it was there. So I look at them, and I mean, every one of these things can be a tool in your arsenal. So no doubt. But I'm telling you right now, when I watch options, I've done this longer than anybody. The spot gamma with the call wall or the put wall is fine. It's a cash settled index. But a stock, you have to look at evenly dispersed calls and puts. That's where the spread traders are. That's where it's more likely to go. Now, you got to combine that with charts, but I'm just telling you, when you see NVIDIA, you need to combine it with charts, but a 1-point strike is not to be trusted with open interest. I'm just telling you, not to be trusted. 2.5 and 5-1, sure. So voodoo lines work great. So, I mean, definitely voodoo lines work fine. So, I mean, a lot of times the voodoo lines line up with price support. But yeah, they're a good tool also. Like I said, those are good tools in your arsenal. So just keep that in mind. So what about everything else? Well, the first thing is, I mean, you're seeing it right now. The markets are selling off just a bit, but then you're getting the Russell to go up. I mean, it's just amazing, these rotational things. Now, let me just tell you, when you trade play, think, or swim, if you press here, it goes to a cursor and it can erase your symbol. It's a pain in the butt. But if I do it over here, it'll put in an order. It's a real old pain in the butt. Yeah, thanks, Roman. So the whole idea is that this sold off and then this rallied. I mean, it's almost like it's only a certain amount of monopoly money. It's fascinating. That sold off, that rallied. It's amazing. But I'm telling you, if bonds are up this much, I don't know what to tell you on the close. But like I said, the Russell needs to reclaim a lot of things. I mean, that's the way I look at it. You better have it reclaim things. And I'll tell you, what is everybody keen off of now? Are they keen off banks? Not this second. Are they keen off the advanced decline? Not this second. What are they keen off of? The big NASDAQ stocks. Every single one is under their ATR trailing stop. Every one. 7 for 7. What's that mean to me? It means a bearish pattern is more likely to work. Or let's put it this way. I know you're doing the paper trades in there, Genu and Jack. It means I'm not buying here. If this was going down and these were all forming like bull flags, that's a whole different situation. So when you have the Russell going up, the advanced decline going up, with these going down, I just back away. I mean, that's the way I look at it. And that's where I am right now. So, chart patterns master, I'm still short Meta. Now, it's tiny. When I talk about tiny, it means less than 20 shares. I'm not crazy in here, but that trend line that I posted for you has worked. So, where could Meta go? Well, like I said, eventually 680, but now probably to the trend line, probably in here, right there. So, probably in there. Like I said, too many people love Tesla. Don't fall in love with a stock, fall in love with a pattern. Just keep in mind, this is not reclaimed a daily anything. So nothing. So it hit support. It filled that gap. Ultimately, it all depends on how it works off this daily oversold. If it futzes around in this area and this gets back to the zero line, I think you're going to see it go to 280. It's all on how it works off that oversold. That's why right here, I don't touch it on the short side. Here is a head and shoulders top. So I just don't understand why everybody loves this stock. So here, is it over the ATR trailing stop? Short term, yeah. But now it's overbought in a downtrend. So I wouldn't do a thing in here. I'm just not doing anything. So that's where I am right now. And like I said, you're getting this rotation. So, Jack, Genu, I'm not touching this suckers. In fact, they might be that. When you watch the things that made it go down going up, then all bets are off on the downside for sure. So, I mean, total rotation going on. There. That's what I'm watching there. But now the Russell's coming back. So I think all bets are off. That's what I think. And just so you know, Chart Patterns Mastery, I shorted it right here, Meta, against that. And I just bought back half. So just to let you know, that's what I did. So, I mean, that's what I did. So I know that it's heresy to say I don't like Tesla, but a chart pattern is a chart pattern. Longer term, yeah, maybe it goes up, but in 1 minute it reclaimed it. Hourly, not even close. In fact, if you're falling in love with a stock, when this gets under the ATR trailing stop, you better wait for it to reclaim it. That's why I tell you it's a better buy on the way up than on the way down. I've watched more people buy it here and buy it here and buy it here. I'm just telling you, I don't want you to get in trouble. The best buy of them all, I was on vacation, was the bull flags. So I know a lot of people have made a boatload of money on that consolidation and the break. So there's a time and a place to play all of these. And by the way, Chart Patterns Mastery. I know this is news related, but I'm still in GTBIF. Like I posted, I bought more. You got to see it get over this. Forget about that candle. That was just some news. If it gets over this, you're talking about 760. Not a big move, but at least it would be the right direction. So just to let you know, I'm still in that because I had to not share the screens. And let me just tell you, it's really tough when certain things are underperforming the market, but then when the markets sell off, they outperform. Yeah, that typical rotation garbage. I mean, if you would have said the Capital One would rally 2 points when the ES sold off 12 points, why did COF? I always go back and find out. Why did this bounce? What made this bounce? So let's go look. I only have a second, but I always go in hindsight to look why something bounced. Does everybody see why it bounced? Because of that support. That's it. How about AXP? Support. Isn't that amazing? And what that means, it doesn't mean to blindly buy it. It means that if you're short, that's where you look to cover. So, I mean, that's what I wanted to show you. So I always back test and find why something stopped where it stopped. So, and that's what happened. Yeah, yeah. Good. I'm glad that helped. Now I'll tell you about theories. So we're short Visa. So now you might ask, why on earth would Capital One, that supposedly has lower credit quality, why would that rally and why would Visa sell off? And MasterCard, rotation. It's almost like there's $1 billion to put in the credit cards. So they start buying this one and they sell this one. It's just weird on how that happens. So, I mean, that's how it looks. And like I said, the one I liked the best was GNRC long term, but it already exploded on me. Now, what I've seen in GNRC long term, that's a hurricane stock. The best time to buy that is in June. A lot of times it does this with earnings. It has a pop and then it consolidates for weeks. So then I'm telling you, it's June when I want to buy this. So I'm very interested in this longer term, not now. In fact, the best buys in GNRC have been when it does that, when it has a trend line. So I know I have to go. Thanks for being with me. I'm glad you saw real time on how we trade. So take care.